watching famous Dave on YouTube.
What's up and welcome back, folks. You are watching the Short Vol Show live, coming to you from Cape Cod, Massachusetts. And I have my little protector here to make my voice sound a little bit better. It kind of blocks my face a little bit, but that's okay. We'll move it down. How about that? So I just wanted to kind of give you an update on the channel here. What I'm doing here is I'm giving you a snapshot of my position and how it changed from day to day and what I'm thinking about. So let's get right to that right now. If we look down here, you can see below my deltas, but let's switch screens here for a second. Okay, so the position I have right now is in Tesla, and Tesla is currently trading 26.05, so up about 30 cents from yesterday's close. Now, I'm currently long 36 deltas, short 6 gamma, and I'm collecting 600 a day in theta. So essentially, it's a position where the best thing that could happen to me is the stock sort of rolls up a couple bucks and just sits there for the next couple days. If we dig down a little bit deeper into the position here, I'm essentially long the April 205 calls and 208 calls and 195 calls, and I'm short front week calls against them. So it's a calendar call spread. I'm long April calls and I'm short the front week calls. And I have the strike set up in such a way that that I'm leaning slightly long in the position here. And this is due to my my assumption that the stock is going to sort of stay range bound and slowly creep higher. If we take a look at a chart for the last, let's see, so this is going to be a chart for the last 20 days. You can see that we've kind of been in this trading range between sort of 190 and 217 for the last, let's say, 15 days. And it keeps kind of encountering resistance up around 215 here. We'll see what happens. If we back up the charts a little bit, we can see that the stock's come all the way down from 415 here. And so my thought process is to collect some of this theta, this $600 a day in decay over time. Now, if we go to a different chart here, I have a historical volatility little section on the bottom here. And the way I got to that was I went under studies, and I added a study for historical volatility. So when we look down here, it's showing the actual volatility is it's showing 25 here, but a couple days ago it was up to 50. If we look at different charts, it's going to show different. So if we look at different time periods, it's going to show different amounts. But let's round this number up and be conservative and say that it's moving around at about a 50 volatility right now, Tesla, right? But when we look at the front week options, we see that they are trading around 100 volatility. So if you're selling something, if you're short an option that's trading around 100 volatility and the stock's moving a lot less than that, then you should make money on that trade. Now, as I was saying before, I have a calendar spread on. So a calendar spread is two options, right? So we can't just look at this option that we sold. We have to also look at the option that we bought and see what's going to happen with that. Now, when we compare the March options and the April options are much more sensitive to moves in volatility. They have a higher vega attached to them, vega being the term for volatility risk. And if we just look at a real quick and dirty number for volatility for April, we can look on the right side here and see that April around a 7 at the money volatility around a 72. And if we go back to our Greeks here, we can see that we are long 86 Vega. Now what that means is that the combination of being long the April and short the May, the sum total of our whole position is we're long 86 Vega. So if volatility goes up a point out there in April, since the April options have a much higher volatility sensitivity than the front week ones, so we'll just kind of focus on those. If volatility goes up a point, we make $86. If volatility goes down a point, we lose $86. So when we see this theta number here of it's showing 400 here, but that's because this is from yesterday's date. But if we put it to today's date, 600. This $600 number is assuming that volatility stays the same. This is what we'll collect if all stays the same. However, if for some reason volatility comes in, if people come in and start selling April options, then we could make less than this because we might lose money on this Vega number. Now this number here is showing 93, the other was 86, so somewhere around 90. So if volatility comes in a point in April, then we may only make $500 and not 600 from this theta here. And the other thing about these theta numbers is this is an approximation, and if you really want to collect this, you need to kind of leave the position for a couple of days. Just leaving it for one day doesn't mean you're just going to automatically have $600 deposited in your account. But over time, this number is going to come in. If you have the opposite position of this and you're paying $600 a day, eventually it's going to come to roost, and you are going to lose that money in theta. And if we had the opposite position on, we would want this to move as much as possible. But in this situation, we would like this to stay still. And I have this, once again, this risk profile chart up again. And we looked at this yesterday, but this is basically showing us that the best situation for us would be for the stock to kind of just sit around right where it is, maybe move up a buck or two, but sit right around where it is for the next couple of days, and we collect some money. That's what this is telling us here. The purple line being our P&L for today, and the blue line being our P&L on expiration. You can tell that because of this this little key down here on the left side. It shows the dates 3/1 and 3/4. So that's the position I have on right now. I'm basically long the April March calendar spread in Tesla, and we want it to kind of sit still. Yesterday, things were going pretty well, but it never really came in, the money. But towards the end of the day, we kind of sold off, and that was not helpful to the position. I ended up basically scratching. I think I lost $29 yesterday. But if we do just go back and look at yesterday's chart really quickly, you can see here at the end of the day, we kind of sold off. It would have been better for us probably if we just stayed up here around 210. But, we didn't really adjust. So if it's just kind of in this range, then we're fine. And so that's kind of what I left it. If we do want to take a look at our risk here is that this makes a big move up or down. And if we go to the Analyze tab, we can see what our risk is. And this showing us here that for a 10% move down, we would lose $1,900. For a 10% move up, we would lose $400. And you can actually just add or subtract whatever your theta is to this. So, for example, if we stay still here, it's showing us losing $12. However, that's $12 plus the 590 in theta, which should theoretically come in. Now, it might all come in today. Part of it might come in today. None of it might come in today. Twice the amount might come in today. But over time, if you leave this for a week and we don't move, then this is going to be fairly accurate. But just over one day, it's not like you can put the position on, collect the theta, take it off in one day usually, because you're going to lose some money getting in and out of the position. So kind of the best way to manage, I would call this a short gamma position. A lot of times the best way to manage it is just kind of leave it and try not to adjust it if you don't have to. And then if things do go wrong though, the way I adjust short gamma positions is I will buy some option. And what's that doing is it's taking a little money off the table, but it's preventing me from getting whipped around. The last thing you want to do is, oh no, it's up $10. I'm going to buy stock trying to defend my position, and then, oh no, now it's back down again. I'm going to sell that stock back out for a loss. You don't want to be whipsawing yourself if you can prevent it. So for me, if we were to, let's say, cruise way lower, I would probably buy, maybe take off slight amount of my position, or maybe buy a put or two. And that is, it's taking a small loss, but it's not setting yourself up to just negative scalp. Now, negative scalping is when you buy the stock paying $210 and then you sell it back out at $205, and that's just throwing money away. Now, if you were to negative scalp less than your theta, then you could still make money, but I've been whipsawed before many times, and I don't really want that to happen if possible. All right, let me come back up on the screen here. Here we go. So I hope everybody's having a good time. I just want to kind of check in every day, give a little idea of my positions, give some thoughts on the market. It is Investor Day today for Tesla. It's the first one ever. I guess yesterday was the second Goldman Sachs Investor Day ever. I don't know what that really means. I guess probably online on YouTube or something, they'll have coverage from Texas. It's in Texas. And so stay tuned for that. I guess just Google it, see what they have. We could Google it together. But I think of an Investor Day as possibly being bullish for the stock, just because it highlights Tesla and it makes Tesla be more in the news. There'll be more Google searches for Tesla. And so I think it's potentially bullish. The reason I'm leaning slightly long is because, for me, the risk of us moving in one direction or another seems bigger, the risk for us to move to the upside at this particular moment. But I am relatively flat, and it would be nice to just leave the position for the rest of the week and collect that money that's behind me. You can see it's like $3,000. Now, it's unlikely that it'll just sit at 210 because the stock never sits anywhere. Tesla's a monster. But that's kind of the plan right now. Appreciate you checking in with me. If you have specific stocks you have questions about, or a position you want me to look at, feel free to reach out to me. And in the meantime, happy hunting, and I will see you tomorrow, same time. Thanks for watching. Bye.
You're watching Famous Dave.